Welcome to Prosper Luxury Channel, home of luxury. Don't forget to turn on notifications for more videos and kindly subscribe to this channel. How to become a millionaire in 10 steps. Do you dream of becoming a millionaire? It may seem like an impossible task, but with dedication, hard work, and the right steps, it is within your reach. In this video, we'll provide you with 10 steps to help you on your journey to becoming a millionaire. With these tips and tricks, you'll be on your way to amassing your fortune in no time. 1. Step 1. Invest in yourself. When it comes to building wealth and becoming a millionaire, the first step is to invest in yourself. This means taking the time to develop your skills and knowledge so that you can better manage your money and make smart financial decisions. Investing in yourself also includes taking care of your health. Eating healthy, exercising regularly, and getting enough rest will all help you achieve financial success. Being in top physical and mental shape will give you the energy and focus you need to tackle your financial goals. Finally, investing in yourself means setting aside time for personal growth. Whether it's reading books, attending seminars or workshops, or taking classes to learn new skills, taking the time to learn and grow will pay off in the long run. As you become more knowledgeable and experienced, your financial prospects will expand. 2. Step 2. Invest in a business. Investing in a business is one of the best ways to become a millionaire. Not only will investing in a business give you ownership of something that can potentially generate a lot of money, but it can also help you learn valuable skills and experiences that will benefit you as you continue on your journey to becoming a millionaire. When it comes to investing in a business, there are a few different options. You could start your own business, such as an online store or service-based business. Or, you could purchase an existing business that is already making a profit and has the potential to grow even more. Starting a business from scratch will require more work and dedication, but the rewards are higher because it is all yours. On the other hand, buying an existing business requires less work but has a lower potential for growth. Whichever option you choose, make sure to do thorough research so that you understand the risks and rewards before making any investments. When it comes to running a business, there are a few things to consider. First and foremost, make sure you have a solid plan in place. This plan should include information on how you will manage your finances, hire employees, market your product or service, and anything else necessary to successfully run your business. Additionally, it's important to understand the basics of accounting and tax laws so that you can maximize your profits while staying compliant with the law. Finally, when investing in a business, it's important to remember that success takes time. Don't be discouraged if you don't see immediate results. Building a successful business takes patience and hard work. As long as you have a clear plan in place and are willing to put in the necessary effort, you should be able to see great returns on your investments over time. 3. Step 3. Invest in real estate. Real estate is a great way to become a millionaire and build wealth. Investing in real estate can be both rewarding and risky, but it is a great way to increase your wealth and create passive income streams. When investing in real estate, you have the potential to make money through rental income, appreciation of the property's value, tax benefits, and more. Before investing, it's important to consider the risks associated with real estate. Make sure you understand all the potential pitfalls of real estate investing and take the necessary steps to minimize those risks. The best way to get started in real estate investing is to start small. Consider buying 1 or 2 rental properties and working your way up. Make sure you do your research and find properties that have good potential for appreciation and rental income. You should also consider partnering with a trusted real estate partner or agent who can provide expert advice and support. Flipping houses is a great way to make money quickly, but it can be risky if you don't know what you're doing. You should also consider that flipping houses takes time, so make sure you are prepared to commit to the process before making any investments. Real estate investing can be a great way to become a millionaire, but it does take hard work and dedication. Do your research and take the time to understand all the potential risks involved before you begin investing. With the right approach and strategy, you can be well on your way to achieving your goal of becoming a millionaire. 4. Step 4. Invest in the stock market. Investing in the stock market is one of the most popular and lucrative ways to become a millionaire. It can be daunting at first, but once you understand the basics, investing in the stock market can be very profitable. When investing in stocks, it's important to do your research and choose stocks with strong fundamentals. Pay attention to the company's financials, product offering, competitive landscape, management team, and future prospects. Look for stocks that have the potential for high returns over the long term. You'll also want to diversify your stock portfolio by investing in different industries, companies, and regions. This will help reduce your risk and ensure you're not exposed to too much downside risk if any single stock underperforms. Additionally, keep an eye on market trends so you know when to buy or sell stocks. Finally, don't forget to factor in taxes when investing in stocks. You'll need to pay taxes on capital gains, so make sure to set aside money for them. With proper research and a sound investment strategy, investing in the stock market can be a great way to become a millionaire. 5. Step 5. Invest in commodities. Commodities are physical assets that are used for various purposes. Examples of commodities include metals such as gold and silver, energy products such as oil and gas, and agricultural products such as wheat and corn. Investing in commodities can be a great way to diversify your portfolio and protect yourself from the volatility of other asset classes. When investing in commodities, it's important to do your research. It's essential to understand the factors that affect the prices of these products, such as supply and demand, weather, and political instability. You should also be aware of any applicable taxes or fees associated with commodity investments. You can buy futures contracts through a brokerage account, buy physical assets such as precious metals or rare coins, or invest in exchange-traded funds, ETFs, or mutual funds that track the performance of certain commodity markets. Depending on the type of commodity you want to invest in, there may be a number of different investment vehicles available to you. Before investing in commodities, be sure to consider the risks associated with this type of investment. Commodities can be volatile and their prices may fluctuate rapidly. Additionally, there is no guarantee that any particular commodity will increase in value over time. As with any investment, it's important to do your research and make an informed decision before investing in commodities. Don't forget to turn on notifications for more videos and kindly subscribe to this channel. 6. Step 6. Invest in bonds. Bonds are debt instruments issued by governments or corporations to raise money. When you invest in bonds, you're loaning money to the issuer, and in exchange, you'll receive interest payments over the life of the bond. Generally speaking, bonds are considered less risky than stocks but have lower returns. When investing in bonds, it's important to understand the different types of bonds and the associated risks. For example, government bonds are generally considered low-risk investments because governments typically have a reliable track record of paying back their debt. Corporate bonds can be more volatile since they depend on the success of the issuing company. Bonds can be bought through most banks and financial institutions. The best way to purchase them is through a broker who can help you choose the right bond for your financial goals. It's also important to consider fees, taxes, and liquidity when investing in bonds, as they can affect your overall returns. Overall, investing in bonds can be a smart way to diversify your portfolio and potentially earn higher returns than with savings accounts or CDs. With that being said, it's important to do your research and consult a professional before investing in any type of security. 7. Step 7. Invest in collectibles. Collectibles can be a great investment, both as a hobby and a potential source of income. As with any other type of investment, you should research the item you're interested in collecting before committing to it. It's important to look at the history and current value of the item, as well as its expected future value. You should also be aware of any laws or regulations that may affect your ability to sell or transfer the collectible. Collectibles can range from vintage cars and antiques to comic books and sports memorabilia. Before investing in any collectible, determine what the item is worth, both at present and in the future. Investing in rare collectibles is a good way to diversify your portfolio and make some extra cash, but keep in mind that these investments can also be unpredictable. When deciding what type of collectible to invest in, consider the condition of the item, its rarity, and its potential for appreciation. Research the market trends and factors that can influence the item's value over time. In addition, look for signs of authenticity, such as certificates of authenticity or appraisals. Once you've selected an item to invest in, you need to protect it. Invest in quality storage containers and cases, as well as insurance coverage in case of loss or damage. Finally, you should keep track of your collectibles' value over time to ensure that you're getting a return on your investment. With proper research and care, investing in collectibles can be a great way to add diversity to your portfolio and make some money in the process. 8. Step 8. Invest in precious metals. Precious metals are an important asset class to consider when it comes to building wealth. Investing in precious metals, such as gold and silver, is a great way to diversify your portfolio and protect yourself against market volatility. Gold and silver have been proven to be safe haven assets, which means they have the potential to rise in value even when other markets are struggling. When it comes to investing in precious metals, you have a few different options. You can buy coins or bars of physical metal, or you can buy shares in companies that are involved in the mining and production of precious metals. You can also buy ETFs, exchange-traded funds, that track the prices of precious metals such as gold and silver. It's important to do your research and understand the risks associated with investing in precious metals before getting started. For example, prices can be volatile, so you may need to be prepared for losses as well as gains. You should also consider storage costs, taxes, and other fees when looking into investing in precious metals. Overall, precious metals are an excellent addition to any portfolio and can help you diversify and protect your wealth over time. If you're looking for a safe and reliable asset class to add to your investment portfolio, consider investing in precious metals. 9. Step 9. Invest in cryptocurrencies. Cryptocurrencies are digital assets that use encryption techniques to secure and verify transactions. They are decentralized, meaning they are not issued or backed by any government or central bank. As a result, they offer an attractive opportunity for those seeking to diversify their investment portfolios and become millionaires. When investing in cryptocurrencies, it's important to understand the risks associated with this type of asset class. Cryptocurrency markets are highly volatile, and prices can go up and down quickly and without warning. In addition, there is a lot of speculation and hype associated with this sector. It's important to do your own research before investing in any cryptocurrency and ensure that you understand all the risks associated with them. Additionally, investing in cryptocurrencies requires the use of a digital wallet to store them, as well as some technical know-how in order to access the coins on different exchanges. You may also need to consider whether or not to pay taxes on any gains made from these investments. Once you have done your due diligence and determined that investing in cryptocurrencies is right for you, you'll need to decide how much money you want to invest and what types of coins you want to purchase. There are hundreds of different coins available, ranging from established coins such as Bitcoin to newer coins such as Ethereum and Litecoin. Once you have chosen the coins you want to invest in, you'll need to open an account with an online exchange, such as Coinbase or Binance, where you can buy and sell the coins. When selecting an exchange, be sure to read reviews and compare fees. Some exchanges also offer additional features such as margin trading and staking. With a little bit of research and due diligence, you can make informed decisions about your cryptocurrency investments and begin your journey toward becoming a millionaire. 10. Step 10. Review your progress and make adjustments. As you approach the end of your 10-step journey to becoming a millionaire, it is important to review your progress and make adjustments as needed. The best way to review your progress is to compare your current financial position to where you thought you would be when you first started this journey. If there are any discrepancies, you can use this time to reassess your strategies and make necessary changes. If you have been following the steps outlined in this video, then you should have seen some positive changes in your financial situation already. As you look back over the journey, ask yourself what worked and what didn't work so that you can learn from your mistakes and move forward. This is also a great time to look at any investments you have made, their performance, and whether or not they are still right for you. Additionally, if you haven't done so already, now is the time to research and consider additional investment opportunities that may be available to you. Finally, it is important to remember that becoming a millionaire isn't a race but rather a marathon. You may not reach your goal overnight, but with patience and dedication, you will eventually get there. As you continue on your path to financial success, be sure to stay focused on your goals and remain disciplined in order to achieve them. With consistent effort and smart investments, you can become a millionaire in no time. You've done incredibly well by watching to this end. We hope this video was helpful to you. If yes, kindly drop your comment on the comment section, like and share the video, and don't forget to subscribe to our channel for more interesting videos and turn on the notification button.